Good morning, and thanks for watching Market Day Report. I'm Christina Loren. With fallen futures prices and declining land values, many are wondering what they should be on the lookout for going forward into 2017. Joining us live on set to discuss the current farm financial situation is Kansas Farm Bureau Professor of Agricultural Law and Taxation at the Washburn University School of Law, Roger McEowen, and Allen Featherston, Department Chair of Ag Economics at KSU. Thanks so much for joining us, gentlemen. We really appreciate having you here today. And let's just jump right into it. The financial situation in agricultural economy so far has changed considerably over the last 2 years. What are the big drivers here?
The big drivers essentially have been the decline in prices for commodities, and with that decline in prices of commodities, we really haven't seen a corresponding decrease in the cost of production. And so essentially right now farmers are in a cost price squeeze. Within the state of Kansas, essentially net farm income in 2014 was $120,000 per farm. It went down to $4,500 in 2015. 2016 looks like it'll be pretty much where 2015 came in. Kansas isn't alone in terms of, if you looked at Illinois numbers, they also had very low net farm incomes in 2015.
Now, what do you think is driving all the volatility in the futures markets? I mean, I know that's a loaded question, but I'm sure you guys have some insight.
Yeah, certainly the volatility in the futures markets is something that occurs fairly regularly. Right now, we've come off a few good years of production, not only in the U.S., but globally, and so that has driven up the supplies. Also, there's been a slowing of the Asian economy, and so certainly that has led to the decline in prices. And if you look out long term, one of the things I think that gets people's attention is that there really is not any long-term increases in prices to look at in terms of, you're probably looking at corn in the $3.50 to $4 range for the next 2-3 years, soybeans in a $8.50, $9 range for 3 or 4 years. And so it leads to a situation where things need to move.
Okay, and you mentioned how now we have such a global economy. We used to be able to really focus on what was happening domestically, but now we've got to look at what the entire world is doing. How has that added any sort of, I guess, skepticism into what the markets are going to be doing, how they'll react?
Well, one of the things, Christina, is that it adds uncertainty, and it makes it more important for a farmer or a rancher to make really good business decisions. One of the things, just to dovetail in with what Allen was saying, is that we see on the legal side of things an increase in Chapter 12 bankruptcy filings across the country. And there are a couple of issues that we're pushing with the new Congress. One is to increase the aggregate debt level in a Chapter 12, because we've seen farmers expand in size when land prices were favorable, land prices were moving up. They were buying more land, they were buying more equipment, they were utilizing the tax code provisions to write off those purchases. But at the same time, as Allen's data indicates, debt levels have increased too. Well, when prices fall and land values pull back, you're in a problem. And some of them have signed long-term leases at pretty high amounts, and now they can't cash flow that. So their ability to repay that debt, and Allen has good data on that coming out of Kansas, has really gone down significantly in many instances. And that has increased the need for Chapter 12 bankruptcy and a good need for legal counsel. Unfortunately, it's, that's the kind of counsel you really don't want to have.
Right, because then you've got to pay more money out of your pocket to get the legal counsel. Now let's talk about repayment capacity, also an important issue. How has that changed over the past couple of years? Yeah,
the repayment capacity, we really went to a situation where farmers had excess cash available to invest in their farms. Last year, essentially, the repayment capacity ratio went to 16%. And basically that means that they're 84% short in terms of making their cash payments. If you look at that in terms of historical perspective, it's the lowest since 1981 in Kansas. And so again, we've just seen the ability to repay expenses, debts, principal, family living. And so farmers are really in a situation now where they're needing to look at making adjustments in their operation.
You know, and earlier in the year, prices rebounded, allowing some marketing opportunities. Do you think those opportunities still exist?
There are opportunities that are out there. to the extent that you have the ability to participate in those opportunities is going to determine your future. And what I mean by that is if you are strapped from a financial standpoint and you have to satisfy creditors and creditors are calling the shots on what you're doing from a marketing standpoint, that also has an impact on what your choices are. And we are seeing that. What we're trying to do under some state laws, in Iowa in particular, and Kansas to an extent, and other states in the Midwest and the Great Plains, is there's mandatory mediation. You go to a mediator to try to work out your debt situations before a creditor can take action against you. And those all play into what you can do with respect to your marketing choices and your ability to play in the market.
Wow, it's a whole other ball game than, say your father's farm or your grandfather's farm. Things have really changed. Now, with the concern of declining land values, what does the debt picture look like in the future?
Certainly the debt picture has increased. Information that we've had over the last 3-4 years, Kansas farmers have increased their debt levels by about 20% from where they were. Probably what's most concerning is as land values begin to fall, in terms of that will end up changing the structure of their financial statements such that their debt to asset ratio is increasing. One of the things, though, on the positive side is because we've had this outstanding profitability in the early 2010s, that has certainly given us the ability to handle some declines in land values without putting the farms in too much stress.
Well, and another thing related to that is we don't have the interest rates at the level they are now compared to where they were in the 1980s. If we had that mixture going on also, it would be much worse for farmers too, but we don't have the high interest rates that we had back in the 80s.
Now, we do have a new administration in place. Where do you see interest rates going as we head forward into this year?
Well, as the economy improves, interest rates will go up. I mean, there's no place for them to go. They cannot go down. And we've seen the Fed slowly try to increase that a little bit. And the only direction is up. Now, the question is how much before it chokes off any type of recovery. But as the economy improves, we can anticipate, I think Alan would mirror this, that interest rates will probably go up. But if you've long-term financed, perhaps you have locked in your interest rate on your land acquisitions and other long-term assets.
Okay, and is that something that you would recommend farmers to do if they are going in for a loan?
My view would be that if you can do that, you should probably try to do that.
Okay, thank you so much. Really appreciate talking to you, gentlemen. We have an economist, we have a lawyer, both very wise, and I think we're going to be talking to you a little bit later on as well. Thank you so much for your time. Roger McEowen with the Washburn University School of Law and Allen Featherston with Kansas State University. We appreciate you joining us this morning right here on RFD-TV. And stay with us. Meteorologist Tim Ross is your forecast coming up at 10 after the hour.